All right, let's jump into it. It is February 25th, 2025. It is a Tuesday. All right. And let's get into it. So we want to take a look at what's going on in the markets. What can we put on any particular trade opportunities? What's happening? So let me share screen and we'll get going. All right, take myself off video. Let's share. Let's rock into it here. And I'm going to start off with a little bit of uh, an overview of zero DTE, which I know is not something we really do much of here, and I don't like doing a whole lot of it. I've laid out my trade plan for zero DTE. If that's something that you want to play with and take your own risks at doing that, you certainly can. Here's how I looked at it today, and there's two ways that I will trade zero DTE, and they're uh, in the trade plan. So uh, it's pretty easy to figure out exactly what I'm doing, but I want to make sure that you can go through it. So let me grab the trade plan really quickly too. And we'll quote from it as well. And these are spec trades. So I don't want to make this a big part of today because it's not really something that we do um, a lot of. But on the zero DTE, it's really directional. Okay, I don't. It's there will be some times where I'll go. I don't really care the direction. I'll go with a iron condor. But I find that my success rate's much higher when I'm choosing a direction. So we're looking right now at a 15 and 3 minute chart. So on the left-hand side, 15 minute. On the right-hand side, 3 minutes here. So I use MACD, RSI, and the 21 and 50 EMAs. Okay, those are my keys. I'll also use the 3 ATR Keltner channel, which is this white band here that you can see at the bottom. And I'll also take a look potentially at the Bollinger Bands, which is this lower green or upper red bar. So those are the indicators that I have on here. So I've got, again, the 21 in green. I've got the 50 in magenta on here. You've got the PSAR reversals, the dots, as well as the Bollinger Band and the Keltner channel at a 3 ATR, which is the average true range. So those are all set up on here for me. And when we open up when we opened up today on SPX, we started the day down. And you can see in you know, the first little bit on the session today, down a little bit for 15 minutes. Then it started to get a little bit more exciting. The second, at 9:45 to about 10. Then around 10 o'clock, it really started to pick up, moving to the downside. But you could see that we were traveling down along. Uh, and again, the time frames don't matter when you're reading charts. Okay, the same thing can apply on different time frames. You're just doing different style trades. But you can see the after the first 15 minutes, okay, we broke the low of the first 15 minutes. That's usually a pretty bearish sign. So you usually wait till 15 minutes of the day are in, and then if you break that range, okay, then that's typically a direction, at least for the near term, that you have. You can see we bounced all the way down here, and I usually won't start even looking at anything till at least 10 o'clock. Okay? So it's rare that I would trade zero DTE before 10 o'clock, and we were heading lower, nothing to do here. RSI heading lower, stochastic momentum heading lower here. Then right around here, we had really penetrated the 3 ATR, got even worse here at a bottom. If you're looking at the 3 minute chart on the session, okay, there was no bottoming action until around 10:18 or so uh, on the day today. So about 10:18, we were traveling down. We had broken the Bollinger Bands. We were traveling down. We started to bottom out here. MACD right around 10:30, 10:21, 10:30 started to reverse its way higher. The squeeze here was starting to reverse right around 1033. Okay, and the stochastic momentum was starting to make its way upward, as was RSI, which was overdone and starting to move up. About 1033 is when that really started to get going to the upside. So my thought on the day was, well, let's play the reversal opportunity here at 1030. And I took a look at the trade right around 1045 is when I entered. Why did I enter a directional trade? Because the expected move on the day, and if you don't know how to determine that, does anyone know how to, you determine the expected move of the day, but the expected move on the day was over 20. Okay. Expected move on the day was over 20. I go to the 5 delta puts, which in this case happened to be the 58.55. At the time I entered this trade, and I'm just giving you a quick sense because people do ask me, okay, we were at roughly 59.30 and I went to the 58.55. So I went 100 points lower than the lowest point at this open when we started to bounce. Okay, so I went 100 points below this. Okay, way past our expected move. Right. So just giving you a quick overview of this. And we did rally. We sold off a bit more. Okay, we meandered around. We actually went down here, hit a new low, and then we started to rally back up. Okay, and we were able to get out of this trade at 11:52, which was right around here. Okay, so we basically went sideways. Okay, we went up a little, we went down a little, we came back to where we were, and we closed it for 50% because the volatility just all came out in that amount of time. So really, we were in this trade from 1040 to 1152. So about an hour and 12 minutes is all it took. We made 50% on there. And that's why I kind of like these reversal trades when you break the Bollinger Band, okay, on the downside, and I can get even further away. And I'm starting to see here at 11, that maybe we're bottoming. Things are starting to reverse on stochastic momentum and the MACD and the RSI. Everything started to reverse around 1030. Okay, so 1030 was kind of the time I got in at 1040. Okay, doesn't mean we can't stay oversold. Doesn't mean we can't reverse and go lower. But that was the momentum play, and that's why I did that as a zero DTE. So anyway, hopefully that clears up a little zero DTE for you. Not the goal of not only this um, meeting, and it's not something we do actively here in the Income Navigator account, but if you're on Discord, if you go into the uh, strategy forums, there is a zero DTE forum, as well as and I did a put credit spread this morning because we were below the 3 ATR, and I like the reversal. So I gave myself another 100-point cushion. We still might hit it, who knows? Okay, but I don't need to be in it that long. I have a 2x stop. Uh, what's the rationale for not going short at the open? Because I don't trade the first 30 to 45 minutes, even almost a full hour, right? So, Lewis, why not go short at the open? I don't go short at the open because I have no idea what the direction is going to be. I need to let the first hour, amateur hour, get out of the way. I need to let all the retailers who are panicking and selling, I need all those people to get out of my way. Okay. I need to wait for the smart people to start trading. Okay. And good traders don't trade in the first at least 30 minutes to an hour of the day. Okay. So you wait to see what the direction is at that point in time. I happened to go about 1040. So I was over an hour into the day before I put the trade on. Okay. I'm okay missing the initial move because I don't want to get whipsawed. I hope that makes sense for you. But I waited an hour, looked to see where we were, and then I calmly placed my trade with it and put in my 50% profit target, and then I just went about my day. So there you go. But you can read about it in my trade plan, how I do it. Now, you can trade with the trend as well, and you could have done that today as we moved higher. But if we're only moving in one direction, I kind of like this. If I'm going to trade that direction, I really like to see where we are. But I'm identifying reversals or continuations with either one. Reversals, RSI gets overbought or oversold, and reversing or the 3 ATR is breached. If you read my trade plan, I did exactly what I say I'm going to do. Okay. And it also says wait 30 to 45 minutes before entering after the open before you start trading. So I followed exactly what I do. Continuation means I would be directional with the moving averages, MACD, RSI, rising or falling together. Let me go back to it really quick one more time. I don't want to spend too much time on this, but let's look at the day trade chart. Okay. So why not? And again, I don't want you guys gambling and doing whatever on it. But if you can't control yourselves, I'm at least giving you a way to be accurate. So you can see we're heading lower from the open. Okay. So definitely heading lower right here from the open on the session. I do want to wait, but MACD was rising at 10:30. RSI was rising at 10:30. Stochastic momentum was rising at 10:30. Even though the direction was down, the you want the active and RSI rising or falling together with the direction of the moving averages. So moving averages are falling, but that's not enough for me. Moving averages falling, but all the technicals rising, especially in the 15, determines the direction of the trade. And then the 3 minute kind of gives me confirmation. It's got too much noise to trade off of it. It just gives me confirmation that, okay, things might be things might be changing. But if you wanted to trade now, well, you're still in a bit of a downtrend, and the and our all of our momentum has been up. So you don't really want to trade against all of um, all the indicators. Okay, so despite the fact that it was falling and indicators were falling, and the moving averages were falling, the indicators are not. Same thing can be said when we're looking at a daily or a weekly chart. So again, the same things happen on these charts when we're looking at something. So let's take a look at ES on the session. So we're down 33 points uh, on the day today, but we don't care about daily moves because daily moves don't really matter because we're not day trading unless you're doing some zero DTE. Okay. Craig, I hit my take profit. I already got all that trade at 11:52. Uh, So yep, I'm good on that. Made a nice, I don't know, $300 in an hour, so that was fine. Something to do. I would do more if I wasn't busy and didn't have other things going on. I'd probably try to trade it every day that I could find a good setup. Right. But if we're looking at the same type of a thing when we're looking at the daily and the weekly, again, we have the longer time frame, which is the weekly on the left and the daily on the right. I'm sure this purple box doesn't help you guys, but so what's the direction? Well, the moving averages are heading higher, right? The green is the 21, it's heading higher. The magenta here, or red or purple, whatever you call this thing, the magenta is also rising. So the direction is up. What is the direction of the underlying? Okay. You trade in the direction of the trend, but I want to confirm the trend with the underlying. Right. So right now, would you get in right now? Well, even though the moving averages are heading higher, MACD is falling, RSI is falling, and stochastic momentum is rolling over and falling. So that's where I start to think, when we're looking at the longer time frame, I'm a little cautious here. Okay? We're still bullish because the trend is up, but the underlying is showing me that things are weakening under the hood. Okay, we're losing momentum. And because we're losing momentum, I don't want to get ultra bullish here. Okay. Should you be bearish and be putting on a lot of trades? Well, you could consider putting some things on that maybe we topped here, but you're still in an uptrend overall on the weekly. But the under the hood, things look a little bit weaker. And really for us, trading 60, 90, 120 DTE, 150 DTE, okay, the daily doesn't really matter. Okay. Yeah, this is 3 ugly days. Really doesn't matter. Okay. You shouldn't have been stopped out of anything that you're doing on ES. In fact, you've probably got great entry points on a new trade, and uh, your put debit spreads are probably paying off nicely. Okay. Your hedges are probably doing pretty nice right now. So put debit spreads are all up hundreds of dollars each. Your The only thing down is a little bit if your naked puts might be down a bit, but one of my naked puts is actually only down 130 bucks today. Another one's down 250. Okay. And I mean, I got a strangle that's pretty much flat. It's down $90 today, and that's it. Um, so I don't have a whole lot that's down much today. Why? Well, because the only charts that really matter the most are the weekly charts. Okay. So hopefully this helps you stay a little calmer when you're looking at things, because if we're longer term horizon traders, then the weekly's writ matters. The daily is going to give you a lot of noise. Okay. Does the daily look great here? I don't think the daily looks all that great, does it? So you've now got on the daily, you can see the green, the 21-day moving average is tipping over, and so is the 50. They're both starting to head down, but the 21 still above the 50, and both are way above the 200-day, which is down here. Okay. So we're not in a total bearish trend, but you've got a bearish PSAR signal that was triggered 2 days ago, which is the white dots on here. Right? So that's been triggered. You have a bit of a double top here. Okay. So if we were short-term trading, and I did put on, and I covered it the other day, I did put on some of those XSP call credit spreads. I only did those 12 days out. Why? Because the daily chart is what I would be using for something that's a 12-day trade. I'm not really looking for this, okay, to put on a new 120-day long-term 112 or putting on, something else out there. I'm not really looking at the daily quite as much because it's the weekly that matters. Now, the weekly is weakening under the hood, even though it's an uptrend, which means let's be a little sideways here. Let's not go all out bullish, which is why I think on the last uh, meetings we had, we talked about ES being, maybe an at the money 112. I also put a strangle on. So both of those, I think, if I'm putting a strangle on, well, heck, we're right at the 200-day moving average on the weekly. RSI is at 53. I think this is a great strangle trade. If we look at where the three ATR bands are, up here and way down here, we're dead in the middle, which would be the 21 anyway. Okay. You're also looking at the Bollinger Bands. They're actually pinching in, and we're dead in the middle. I would prefer to see the Bollinger Bands wider to put on a strangle, because the tighter they get means the volatility is coming out. And if we make a move one way or the other and break those and those things start to open up, then we could really get a move in one direction or the other. But for now, as Bollinger Bands were getting tighter and we were hanging around that 21, I just think it was a good time for a strangle. And if I was identifying what to do here, you're in the middle of this uh, band of, call it the volatility box, as Don Kaufman would say, or you can call it a balance area. We're right in the middle of it. So you're dead in the middle of this range. There's really nothing going on. Now, if we break this range or do something else, then we'll make some adjustments. You can see too that we pushed it down well below the Bollinger Band today, this bottom green. Okay. So Bollinger Band here, and we broke it, and now we're coming back up. It might be an opportunity if you're a swing trader on something short term that, you hit the bottom of the Bollinger Band, you broke it pretty good, and now you're starting to rebound up. So do you want to add a swing trade here? Maybe, but I would be fighting against MACD, RSI, stochastic momentum, all heading lower, PSAR triggered bearish. I'm probably going to stay out. I don't really have a reason for that. But if tomorrow we break today's highs, and this does end up being a hammer reversal candle, where right now the bulls are trying to push this thing off the bottom. The bears did their best, and they're failing. Okay. The bears have done their best to push this thing even lower to 59.25, and right now the bears are running out of steam on the day. Okay. We saw that with the daily chart. Uh, so right now I wouldn't do anything because I don't have a confirmed reversal yet. Is this hopefully this is not like too much technical analysis talk, but uh, I think you don't need so much technical analysis, but I think it doesn't hurt to get some ideas from this. Where are we in the whole scheme of things? Things could be rolling over. I don't know, but we haven't even broken the 21. And we haven't broken the 21-day moving average for months. We've touched it here, we've touched it here, we've touched it here, and now we're touching it almost again. Okay, but we haven't broken it. If we break it, then there could be more pieces. But yep, sitting on your hands is an option. Sitting on your hands is a skill. And for me right now, I think we just sit on our hands. There's just no reason to jump in, I think, and throw on all kinds of trades on ES here. Okay? There's also no time to even really panic or be worried. I mean, now we're only down 25 points on the day, less than a half a percentage. Okay, it might feel worse for some of you, but we're only down a small bit. Now, let's go on to oil. So, same type of analysis here on oil. I don't know why this thing's. Let's get rid of this for now. Same type of analysis on oil. The 21-day moving average is below the 50 on the weekly. Green below the magenta line. Okay. This is a definite downtrend, right? We've tried to come up, we've hit the 21, we tried to come up, we broke it for 4 days, and then fell down below it. Okay. But if we're looking here, MACD is falling on the weekly, RSI is falling on the weekly, and stochastic momentum is falling on the weekly. There would be no reason for me to consider putting on really bullish trades in oil right now. Now, is it a strangle setup? Well, sure. We're not far from the 21. Okay. Well, at least we weren't. We are getting a little farther from the 21 on the weekly. RSI is still at 43. It's heading lower. Ideally, I would like it in this band, but I don't think it's a bad time to put on a strangle. I would probably be patient though. I also don't think I would be popping on all kinds of long oil trades in here. It doesn't make any sense because everything on the weekly says we're going lower. And everything on the daily here says we're going lower. The 21 broke the 50, okay, for the first time the 21's broken down to the 50 since January 2nd. Okay, so you can see right here, 4 days ago, the 21, the green, is heading lower, it's back below the 50 on the daily. All right, so now we've got the weekly pretty bearish and the daily heading even more bearish. So I just don't see any reason, I don't see any reason to try to fight that trend. Now, you are below the bottom of the Bollinger Band here today. So could we see a bounce and a reversal from here? It's possible. If we think maybe the momentum on this move is running its course, stochastic momentum is getting to oversold. RSI is not there yet on the daily. RSI on the weekly is not even close to oversold. So there could be more downside left to go. You have some support. Where'd all my little indicators go? Well, now I'm not happy about that at all. All right. But you could have some support down in this area. Okay. This puts us right around, 66 and change or something. No, I don't. Yeah, I didn't mean indicators. I have my little drawing tools. I had them all nicely laid out at the top here, and now they're all gone. I have to redo that. But I'll do it. We'll do it later. Oh, here they are. Sorry, it got moved. So I just have my own little drawing tools up here. So the things I use the most. I know, I get it. My bad. So there's some support down here or right around this, 66 area. We can go back further and find other support areas, but I think this thing, if we drag it around this way, okay, it's pretty good. We've hit it here, we've hit it here. We didn't quite hit it here, and then we've just been bouncing off of this support here. If that breaks, then maybe there's some more oil to the downside, but you're right at the 200-day moving average on the weekly. You've got a support level below here. You've got the Bollinger Band below here. And then down here on 60 is the bottom of the 3 ATR band. So a couple, and you're getting into oversold territory on some of the, not in it yet, but we're getting to close to oversold territory. I don't think I would do anything on oil. I don't think there's a trade on oil here. Being below the Bollinger Band, I don't think I'd want to sell call credit spreads because this the rubber band's extended and it could snap. Okay. Now, here's a good example of the Bollinger Band really tightened here. And now you can see these Bollinger Bands, the top and the bottom, the blue and the green. These are starting to widen, which means volatility is picking up in oil. Okay. And even though we've broken it, it's opening, which means we could be in for some more downside in oil. I don't know if there's any tariff concerns. I guess that's pretty much it. Okay, so Trump concerns, tariff concerns, uh, just you're gonna have to get used to this whole Trump presidency thing because it's going to play havoc in the stock market, and it's really difficult to trade when he's putting tweets and tariffs and stuff out. You're just going to have to be consistent with your plan. Okay, I think things he'll do will probably end up being good for the market at some point. Okay. But until that time, we're going to have a lot of volatility. And I think you just have to take advantage of it. So oil, I see no trade. We're sitting on a 111 trade. It's down 50%, nothing to do there. And we're sitting on a Strangles down 30%, nothing to do there. It's been a pretty hefty move, okay, for in oil for 6 straight weeks of down moves. Okay. And we've got trades on for 14 days and 7 days. Uh, I'm not too worried about those trades at this point, but we'll watch them. If they hit our stops, then we're out of those trades. All right. Hey, Craig, don't start calling the bottoms again because that didn't work well last time. So, all right. Anyway, but you could be right. I mean, I'll tell you what, nobody remembers anyone's bad calls. Okay. Nobody remembers people telling you that the market was going to reverse or something. Like no one remembers those things. They only remember when you're right. Um, so usually, and then people just make hay on the fact that they were right once. Maybe wrong, Craig, I'm not saying this is you, but people make hay when they're right once, um, and they can market that thing, and then no one remembers the fact that you were wrong 90 times. So anyway. So there's oil, nothing to do there. Let's look at gold. Okay, so gold, definite uptrend. Moving averages are all higher. Okay, everything looks pretty nice here. MACD's been rising, RSI's been rising, stochastic momentum's rising. But this week, with some down moves, mainly today's down move, okay, you've got MACD maybe starting to roll over a bit, and RSI, which is overbought, is starting to roll over from overbought. And stochastic momentum is not doing much of anything right now, but it has lost its momentum to the upside. Has gold lost its momentum here? I don't know. But if we zoom in on the daily chart, well, this thing's been rolling over now for 2 weeks almost. A lot of chop. It can't seem to break this level up here, this 29.66. We've tried it. We've tried to break it 3 times, including today, and today we're failing. Okay, so we opened up here, we sold off, we've recovered a bit on gold, but we've been overbought, so it's not really a surprise that we're coming down on gold. Uh, our gold trade is now up $405, okay, which is fantastic. So we're playing the fact that gold right now is just meandering its way sideways. Is gold bearish? No. Is today's big down day in gold bearish? No, we're still above the 21. Okay. Could it be the start of pulling back? Sure. Maybe we pull back to the 21. Maybe we even pull back to the 50 in this level here. But when you look at this level, 2,800 or so, okay, there's a support, as we just talked about here. That's not even going to get us near the 21-day moving average on the weekly. So even a pullback to 2,800 doesn't change the outlook on gold at all, in my opinion. So, uh, yep. And it's a healthy pause, as Craig said. If you want gold to go higher, I think this is great. You just keep watching this thing and moving sideways. And I think if there's some more selling to go, I think gold's still going to be the place to want to be, as long as we find out if all the gold is still in Fort Knox or is it all gone. So, and if you guys aren't following the news, don't worry about that comment. So, uh, anyway, so there's gold. What would you do on gold here? I kind of would do nothing. It's not strangle worthy. It's not bullish worthy. I think you just let it go here, and let's see if we get any kind of reversal off of these candles. So there's almost no trade in gold. So right now we're striking out. Like really no trades in ES to put on, no trades in oil, no trades in gold. Where's the trade? Okay, so where can we trade? Well, let's take a look at bonds. Uh, And oh, so Craig popped in there the 120 DTE trade. I would probably wait until we get closer to the bottom of the Bollinger Band before I do. You're doing it as a campaign, but I would potentially wait till we get down to the bottom of this Bollinger Band or the 50, and this is where I would be selling. If I was doing a single discretionary trade on gold, I'd like to do it at the bottom of the band, not at the top. But if you're doing a campaign of 120 days, then that's up to you on that. All right, so let's jump in and look at bonds. While bonds look like they've been making a really big move the last couple of days, if we look at the weekly, okay, it's a decent move. Is it a massive move? No. We're sitting right at the 21-day moving average, which we haven't broken the 21-day moving average to the upside since way back in here in July of last year. Okay, so we broke the downtrend. Boom. That's good. So broke the downtrend, take it off. Don't worry about it. Okay, we're now in an uptrend. You can see we also broke this anchored VWAP. We came down, we broke above that. It's probably not really valid here at all. Is there a VWAP that would be valid? I would probably take a look at something like this uh, here, which is the previous swing high point. Okay. I'll put the anchored VWAP on, and that's pretty interesting to see that that is the high of today. Okay. Doesn't mean we can't break it, but there's resistance there. We did break the 21 finally. We're still below the 50, so still in an overall downtrend. However, would you be bearish on bonds because it's a downtrend? No, because the underlying technicals are telling you it's been reversing since January on the MACD, the RSI, and stochastic momentum. So the momentum is up. Okay? Even though the trend is down, the momentum is reversing on this. And we saw the reversal actually happen back here, which was a great spot to get in. So does that mean anything? Well, what it means is I think strangles are still a great trade. You're sitting right at the 21 and you're sitting at the 52 on the RSI. I still think strangles are a good trade. Now, Bollinger Bands are pinching in, which means volatility is coming out a bit of the trade. Okay. And could we, see a big move to the upside? I don't know how big of a move we're going to get. I don't know what the catalyst is, except for the market going down and people running to bonds. Now, bonds have good yields, market's falling. Okay. Why not get into bonds? So I think as the market goes, now we're starting to see real divergence in bonds, which is starting to make some sense. Um, in here. Let's get this thing off the screen too, because this doesn't really make any sense. So maybe bonds, people are flocking to them because the market's starting to sell a bit. Maybe. But we look at the daily chart here. All the momentum is to the upside. You've got the 21 about to break the 50 here. You've already had the PSAR bullish reversal, so three dots 3 days ago. Things are very nicely bullish, but you are above the Bollinger Band here on the daily. So you're above the Bollinger Band and you're right at this anchored VWAP and you're getting close to the 200-day moving average and you've got the top of the 3 ATR. So there's a heck of a lot of stuff ahead of you. Doesn't mean you can't break it, okay? But we got a heck of a lot of stuff to try to break through to go a lot higher on these. I'm still in some strangles on bonds. It's not great on the portfolio today because we're pushing the upside a bit, but the strangles, while they're down today, aren't really a big deal on this. However, if this thing really starts to get cranking, we'll have to watch the momentum to the upside. So, would you trade something here? Well, I think you can. So, I think bonds are a good trade. Not to necessarily, you could strangle it, which I don't think is the worst thing in the world on this move. So I think strangles are still good based on the weekly chart and all the overhead resistance. So I think strangles are still good. I also think a 112 trade is good because I think that gives us no risk to the upside. I think jade lizards are good because right now, while we were doing, several of us were doing the inverse jade lizards on oil because we wanted no risk to the downside. Now I think the risk is a little bit more to the upside. So now that eliminates the reverse jade lizard or the inverse jade lizard. Now I'm looking at maybe a regular jade lizard or a 112 trade, which are basically the same type of trade, or potentially even a put credit spread back here would have been a better idea than it is today. Uh, so I think that's a potential idea. So it's really the only trade we've found or right now in ZB is potentially like a jade lizard or a 112, where if we drop a bit, we win. And if we crank way more to the upside, okay, we have no risk to the upside. So I think that's fine. But if you're above the Bollinger Band, not my favorite time to place a bullish trade when you're above the Bollinger Band. Let's see. If we get, I would think if we get a pullback tomorrow, it would make it a better trade, but I don't think it's bad. When do you choose a Jade Lizard versus an ATM 11X? Really, I think it's a matter of preference because they're essentially, in my opinion, the same type of trade. However, the at the money 11X trade for me is when I'm feeling that we are overextended. So I don't really think we're going a lot higher, but I don't want the risk to the upside. Okay, so if I feel like we could break to the upside, then I would do it. I really am shooting for the trap with no, but so I want to put the trap on right where we are. I think they're pretty similar trades, and you could put them on the same way. But the 11X trade is putting this on at the money, whereas the Jade Lizard is I'm putting on the credit spread uh, out of the money on the call side normally. So we'll walk through a couple, and we'll do a trade on this because maybe bonds is an opportunity. All right, let's just quickly move through. Copper has been selling down. Copper is probably getting closer to this 21 EMA. It had a big, monstrous run, hit the Bollinger Bands and the 3 ATRs, rode it a little bit, but eventually it did tip over and came back to the 21. Everything comes back to the 21 eventually. Okay? If you look at the green line here, if you break it to the upside, we're eventually coming back. If you break it to the downside, we're coming back. If you break it to the upside, the farther away you get from the 21, okay, and unless the 21 is, look how steep this 21 is, but you can stay above it, but at some point you're still coming back to touch it. Now, you could touch it and go, or you can touch it and break, but either way, you're probably coming back to it at some point in time. Yeah. I like to look at it the other way. So 21 is moving higher, but the price has still got to come back to it. So I you can do it. You can look at it either way. I mean, obviously the 21's got to follow the price a bit because it's the moving average of the price. So it's going to follow price, but eventually price will come back to it or it comes to it. However you look at it, it doesn't really matter. But we've come back to it on the 21 here on copper. It's maybe not a bad spot, I think. Look, wide Bollinger Bands back to the 21 on the daily, not there necessarily on the weekly, but the RSI is at 55. I don't think a strangle on copper is a bad thing here. So I think putting on a strangle on copper is not the worst thing in the world. Now, looking at the weekly, we're just starting to get, we got to the Bollinger Band, we're rolling over, we might be headed to the 21 there. So I don't know. It might be a tad early. The daily says we're there. If you're doing something shorter term, I could put on like a 30-day strangle based on this, but I think we might pull back some more. All right, so let's quickly look. Silver right at the 21-day moving average on the weekly. So if you're doing a strangle in here, I think silver is a really good strangle opportunity. It's been very flat and very much in the same range now for quite some time. Bollinger Bands are really getting tight on the daily, and we're moving lower. So could there be some more downside? Yeah, but I don't think that really hurts our strangle. Uh, so I think silver could be a good strangle opportunity as well. The move last January. What move? The move lower stopped you out. Oops. Yeah. Okay. The move lower stopped you out in January. Is that what you're saying? Or to move higher? Oh, HG. Okay. HG. Sorry. Yep. Because copper, while it was sitting here nice and calm, came down to the 21, it bounced, it just ran higher on the whole, um, I think on the China news, not China stimulus news, and such. So I think that's what it ran up for. Yep. So you'll stop out. Things will happen at times. I like it right now. We're back in the middle, in between these. Okay. You can also see that in, look how tight these Bollinger Bands were on February 4th. Okay. I mean, maybe you're talking about this move here to here in January. But when you look at sometimes these Bollinger Bands, look how tight they got here. So when we made the move higher and we broke one and the bands were opening up, you saw a big move coming. Okay. All right. So, but again, we're just playing the probabilities, playing the options, giving ourselves the best chance to be successful on these. All right. RTY, definitely breaking down. It's into our trap now. So RTY is actually just starting to get into the trap, which is fine. This trap goes down quite a ways from here. Uh, so despite the fact that RTY trade is down right now, and it's down decently, it's down 96%, we're just entering the trap. Uh, and if we're looking at the daily chart, we're below the Bollinger Band. So and I drew these so you guys could see, but we're below the Bollinger Band on the daily, but we're not uh, here, but we're getting close on the weekly. Let me move this thing out of the way a tad so you can maybe see it easier. Okay. But you can see that we came down this week, and have hit the bottom of the Bollinger Band, and then we're off of that low a little bit here. So I do like it in here as the trade that we have. I'm not going to do anything different on this trade. Strangles are best when Bollinger Bands are wide. Absolutely, because a Bollinger Band basically is the easiest way to gauge volatility. Okay? When the Bollinger Bands are wide, volatility of the stock is, you can see the stock is just moving big chunks each week. Okay. And then once you get to a spot where the Bollinger Bands start to contract, then you go into these little more calm periods. So Yeah, looking at the Bollinger Bands, let's see if we can do it on 6A here as well. Okay. If we look at the weekly, okay, when Bollinger Bands, when the stock starts moving, the bands start getting wider. Okay. And you can see it was moving to the upside, band getting wider, wider, and then once it comes back a bit and the bands are still pretty wide, I think that's the best time to do strangles. Okay. All right, RTY. Yep, you're below the 200. It's not a great looking chart by any stretch. I wouldn't be adding into it, but I'm certainly not getting out of the trades that I'm in. So I just don't see a trade in the Russell right here. But you are at overbought levels almost on RSI. You're overbought on stochastic momentum. You're below the Bollinger Band. So just because we're below this 21 here on the daily, I don't think it's going to make me too nervous in here. I think we're getting to now we can stay oversold, but we're oversold on a lot of the different metrics that we have in here. So I don't think it's a trade, but I certainly don't think I would get out. Now, if we bounce back up in here, because the Bollinger Bands are getting wide, if we move back up into this 21-day moving average area, then I would think that that might be a good strangle opportunity. All right. Hopefully that helps. Gives you guys some ideas on what we're doing. So a lot of technical analysis stuff today, giving you some sense of how we trade zero DTE, how I look at some of these charts just to get some ideas. We have some ideas. We'll see what happens on them. If you're looking at something like an Amazon, okay, and I don't really like to strangle stocks because I hate most stocks. Okay, I just want to be directional on stocks and only high quality stocks. Is this a spot to potentially look to get long Amazon down in here? Well, the weekly looks pretty awful, breaking to 21, heading down to this pivot level. Okay, you get the 50 to 200 below, so you got some support down in here. So, but the weekly doesn't look great, and the internals say hey, this is our direction. So you just, if you wanted to trade the trend, you can. But if you look at the daily here, you're getting extended to the downside. You've now broken the 3 ATR today, and you've reversed off of that level. It doesn't mean that I should put on a trade today in Amazon, but if tomorrow is an up day, and maybe you look at some volume, is it an up day on decent volume? If today is going to be a decent volume reversal hammer day, and tomorrow we get any kind of a move to the upside, that may not be a bad short-term swing trade on Amazon. I do have an Amazon trade on. I'm not worried about it in the least. Yes, it's down. What's not down right now? All right. So there's Amazon. Meta, you're at the bottom of the Bollinger Band. Nice reversal day today. You're right at the 50-day moving average. You're right at the anchored VWAP from, I don't even know if this is valid anymore. Let's get that thing out of here and maybe move it. That'll be some resistance at some point. Okay. So we had some support on the anchor VWAP yesterday, which has held up pretty remarkably well. We broke it today. We're trying to get back to it. Uh, I don't think I would be doing anything on Meta, but it looks to be getting a bit overdone on the daily. But the weekly, I think there's a lot of pullback to come on Meta. Nvidia, we got earnings tomorrow on this thing. Nice reversal day today. I wouldn't touch it ahead of earnings. Okay. We have a nice uh, poor man's covered call trade going on this thing. It's we're doing just great on this trade. So I like where we are on this Nvidia trade. Nothing to do here. It's just kind of sideways action. Wouldn't do anything. Tesla looks like doggy doo-doo. Okay, this thing does not look great. Okay. And doggy doo-doo is the technical term for this chart. Okay, but you're at the bottom of the range again. Okay, so we're at the bottom of this range, give or take. Again, we're below the Bollinger Band. We're below the 3 ATR, getting a little bit of a reversal off of this channel. I'm not calling that channel as a perfect spot to get in. And then we've got all kinds of, I think, support around this 270-ish area. So we could still head lower, but we're now oversold. Now we can get more oversold on the RSI, but RSI is oversold. I think this thing may have a little bit more short-term pain before it reverses. I wouldn't do anything here because I'm not seeing, just like on the zero DTE, the longer time frame is, still like it's up on the moving averages, but they're starting to roll over and then down on the internals. I just don't like anything here. Okay. It's not showing that we're reversing yet, so it's just nothing to play. All right. I think personally, I think the biggest problem with Tesla is Elon spending all his time in Doge and spending no time with his company, at least publicly. He might be, the guy works probably 20 hours a day, and he probably spends some time with the Tesla executives and people in charge. He's not running day to day, but it just looks like he's ignoring his company, and I think that's just killing his stock. Uh, but the long game may be. Um, the long game may be that he just wants, less restrictions and he's going to watch his stock head down because he really care? I don't think this guy's ever cared about his stock. He cares about what he's doing because he wouldn't make the dumb comments he does that tanks his stock half the time. As far as anchored VWAP goes, question. Okay, so anchor rated VWAP. Uh, here's my here's my settings on the inputs here. So I'm using percentage 2.5 on the number one multiplier, 0.01 on multiplier two. Okay, and then that's pretty much it. Okay, that's all I'm doing. So there's the anchor VWAP settings. This is recorded, so you can go back and grab those if you need. That's my settings on pretty basic anchor VWAP settings. I just try to pick the lowest and highest points, and you can pop it in, and then you see where those things come into play as resistance or support levels. And right now, we're still above the anchored VWAP support levels here. So nothing to see, nothing to do. Whoa, at this point in time. All right. So there's some stocks. I don't want to get into too many stocks. And then this just warms my heart to watch this. If you own the stock, sorry, but I've been waiting for this thing to die. Okay. And I want it to flip and die. And it is dying. Okay. I just kind of, I don't know that I want to see people be miserable. Okay. But I'm sick of seeing everybody saying how great and easy it is to wheel this thing. Well, now that they've got a 30-point drop in this thing, I wonder how their wheel's doing now. Anyway, I still would like into it. So it's not really because I want to see other people's demise. I want to get in. And what I said is if we fill this gap, which, man, we came also close to filling the gap today. We're at the 50 EMA. It could come down more. And if we're looking at the charts, I don't see any reason to stop going down on the weekly. We're overbought and heading lower, and we're just starting to get going on that. So I think Palantir could be in, it's a meme-ish stock now, but there's nothing to say that this thing's bottomed. Now, if we start to reverse off of this tomorrow and we get some stuff going, then maybe. I'm going to give it a little bit more. I'd like to see this gap filled. So if we could fill this gap, then what I want to do is I actually do want to add it to the lazy trader account. I want to sell naked puts. I could probably sell them here, but I still am not convinced that Palantir's done selling off here. But the price is way better than it was, okay, a month ago. Okay. I just think we need to get down to this 80-ish mark, or at least fill the gap completely. And then if that's the case, then I think we'll be okay. All right, so we're doing a good job filling this gap, though. All right, so there's a bunch of things. Question: is HIM still on my watch list? It is on the watch list. I don't have anything in HIMS right now. This is like Palantir. There was no reason to chase this stupid thing this far up on it. So now that we have sold off and we're back down to like some of the anchored VWAP areas. Get rid of this one. This one makes no sense. Okay. We're right at this anchored VWAP from these lows back here. I probably could even move that to, these lows or something in here. Um, we're below it, which is not great. So no good anymore on these. But right at the 50-day, but if you look at the weekly, it looks like more momentum to the downside is ahead. And even though we're holding the 50 here, I don't think I'm ready to get in here. I think the company can be good, but right now the momentum is down. There's just no reason to fight the momentum, okay, until we see reversal. And I'm okay not calling the exact bottom on things. Okay. So calling the exact bottom, can get you killed. So I want to see signs of a reversal. So Hims is there, and then Hood was also something similar. Was It was just a stupid move to the upside, okay, and then hitting the 3 ATR, breaking the Bollinger Band, and then just selling off below all its moving averages. Is it done? Doesn't look like it yet. So let's give this thing a little bit more room, but we could be really close to Robinhood being a long-term trade opportunity. So we're getting better on many of these trades. Okay. SoFi, bottom of the Bollinger Band, right at anchored VWAP on here. This has had a really strong pullback on it. There's no reason to get in. I'm already in with one trade, but no reason to add to those trades because everything still looks bearish. Nothing looks good. All right, let's I know we spent the whole time on this, but hopefully this would be helpful uh, for you guys just to see this and go through some trades. So I did not see a lot of trades that I wanted to put on. Maybe a Jade Lizard in bonds. Let's take a quick look at a trade there, really quick. I know we're over time, and I got to move on, but let's take a quick look in here. Um, nice red day today. It's all good because there's nothing in trouble that I really want to get out of. But let's look at bonds. So if we wanted to put on a Jade Lizard or something in bonds, usually 60 days is where I want to be. And a Jade Lizard would be uh, you're selling. I usually will look at the expected move and start there. So we would put on a call credit spread and then maybe, I don't really know where. Uh, we'll sell something down here. Let's just take a quick look at this. Obviously, you got to bust it a bit to get it to work. We'll probably have to bring these up. Okay. Not really setting up great. Here's the problem with the Jade Lizard on bonds is you have to take in more credit than the width. Now, the width is a full point. Okay, so I need to take in a lot more credit to turn this thing positive. Okay. In fact, we have to get all the way up to here, okay, to take in more than a point on this. Okay, so you can see that this is now a 1 in 17, 64ths. So we just need this thing to be at 1. This is close to 1, but it's not. You can go out a little bit more, take in a little bit, but you still have to take in more money than the width. And when these widths on ZB aren't great, it's really hard to put on this particular trade. So not making sense to add a Jade Lizard in here because I have to pull these naked puts up too far for my comfort zone. Okay. 115, yeah. Okay, so it doesn't work. It doesn't work well at all for this. And then even at a 112, yeah, they don't really set up great here either, but they're a better option because I'm still why. But let's say we do an at the money let's say we do something like this, an at the money put debit spread, and then we want to finance this thing. Well, we can go down to about 7 to 108. Okay. And add this a 2 to this. Because we're doing a 2, then this thing will set up a little bit better. We might have to go to 109. Geez, no, I still really can't get this thing to a credit without getting to about 112 either. So it's really not a good setup on this. We can come down a little bit more. But if I'm having to work this hard to make it work, it's just not a good trade on bonds. So jade glitters don't really set up. The at the money would be something I would put on here because it's cheaper. So if I did an at the money put debit spread, it cost me 35 ticks. If I was doing the jade lizard, okay, up here, okay, I'm taking in like 11, but that's just not enough for me with a one wide to give me to help me out. So I'm not taking in enough credit on that. So the at the money sometimes will work better. I think the at the money works better on like an ES or something that's got bigger things on it. All right, so I'm not going to do anything here today. We're going to leave our positions. It's a down day. It's bonds that are down the most for us, and they're not terrible. Uh, we're still fine. We're nowhere near 107 and 104, and we're nowhere near 125 or 126 on bonds. IVs up a little bit on bonds. Nothing to really do. The strangles aren't even close to being even watchable. So 107 on 115. Oh, you're talking about putting on a 120-day naked put in bonds. Yeah, if you're bullish on bonds, then you could certainly go out and do that. But the problem for me is bonds have run so high and we're above the upper Bollinger Band that I don't think it's the best time to put on a naked put trade. I would rather be closer to the 21 EMA before I put on any sort of a long trade, unless you're doing campaign style trades where the charts just don't matter and we go for the really big points. But if you're doing campaign trades, then fine. But if you're doing discretionary, I don't think with the stock being above the upper Bollinger Band and hitting the anchored VWAP today, I don't think this is a good spot to add discretionary long bond trades. Okay. So anyway, there's my couple cents on this thing. There's really nothing else to cover on this. I 100% agree that 107 is the bottom of the weekly. And I do think that that's probably as low as we're going. It's just why you're going to be in this trade a long time if we slowly move down towards 110 again. It just makes no sense to do it now. So, I want to get out of the trade quicker. So let's put it on here. If we start to reverse here and get overbought and start to reverse down, and 120 could be a pretty good point, or this 118, if we start to reverse off of this, then I would not be opposed to like a short term call credit spread. Okay. Question was, how do I buy Bill on Tasty? I just go up to ask, I click the ask, which is the buy, and how many shares do you want? That's all that I do. So I'm just buying it. I'd like to keep this thing uh, somewhere near. I have $146,000, but my capital requirement on this thing is only $10,000. I probably could up it a bit in here, but I don't want to use up my cash right now to do that. But Bill's fine. Um, if you go to indicators and you type in, let's see. Let's see which one I have here. You want anchored VWAP. So that's the actual name of it is anchored VWAP. I think it should be standard, but let me double check for you. Yeah, anchored VWAP. Use there's a couple in here. I don't remember which one, but it's anchored VWAP. To check that. So I don't remember which one I used, but it's anchored VWAP with the word anchored in there. All right. So there we go. There, and Bill, nothing to do there. Here's that Amazon trade, nothing to do there. Nothing. Nvidia's in great shape. Okay. Tesla is not in great shape. But what we did today was we took $900 more off. Uh, we made 900 bucks by closing the call credit spread, and we put another covered call. I'm saying call credit, but covered call, and we put another one on today. Okay, at 310. So while we are down, okay, on this trade, we're actually not this far down. Remember, I said I would close out of a trade the if the net income from this trade exceeded 30%, and right now it's not. Even though this shows that the long call's down 39, we've made over $3,000 on covered calls so far. So while we are down 5 grand, that's only 23%. If we get there, I'll jettison out of this thing. And it's getting there. So we may pull the plug on this Tesla trade. If we get there and it's really performing badly, I'm shocked at how bad Tesla is doing. But that'll be it. Well, Bill shares. I have 1,600 in this account. All right, guys, I got to run and let's wrap it up here for today. Hopefully, this was helpful. A lot of technical analysis and just trying to figure out how do we tell if something's a good, gives me the best odds to be successful. You can also just ignore it and just put on trades based upon delta and probabilities. And if you do that, you should win, I think, most of the time. Okay. And even like Craig's doing, if you're doing that 120 days, 6 delta on bonds, it'll probably work out. It's just to me, it'll take longer if I put it on today than if we calm down from above the Bollinger Band a bit and I can get in at maybe a 1 point lower tomorrow or the next day as this thing maybe moves sideways, then I'll get out of the trade a lot quicker. Okay, so that's all. Um, okay. So anyway, there you go. There you have it on these things. And have a great rest of your day, everybody. We'll see you later. Bye.